I'm Denise Co-Genovese from IPEM, and today I'm joined by Annabel Spring, CEO of Allfunds. Annabel, thanks so much for stopping by for a chat.
Thanks, Denise. Allfunds is a global dealing and distribution platform. We have 1.7 trillion assets under management, and what we do is we really connect fund managers with a range of global distributors. And when we look at our platform, we've really been instrumental over the last 25 years in democratizing investment. So we've really taken the industry, facilitated it to connect those fund managers to those distributors. We have 17 offices and we serve 66 countries. And we're really proud of what we do. And when we look at the evolution of the business, we're now evolving into servicing them not just through mutual funds, but through ETFs and through alternatives. And out of our over 900 distributors, over 400 of them now use private markets.
So I know you've got a background in wealth management. You were formerly CEO of private banking and wealth at HSBC. Can you talk a little bit about the evolving landscape of wealth management?
Well, maybe let's start with what are the underlying trends, because the underlying trends haven't changed. Maybe for the last 20, 30 years, we're seeing a phenomenal growth in wealth management and investment as an industry. First, obviously, with demographics, growing wealth as well as just a sheer GDP trend. And then we've got access to wealth with the increase in digitalization. And those three are really the source of these tremendous tailwinds behind our industry. But then if we look at the impact of them on the end consumer, that's where things get really interesting. So when we look at end consumers around the world, and remember we're serving over in 66 countries, we see some really interesting trends. The first is the absolute expectation of digitalization. Everybody expects to be able to do everything on their phone instantaneously, and that's changing the wealth management industry. The second thing that we're seeing is sophistication. As end consumers get wealthier and they get access to more information, they're suddenly expecting mutual funds and ETFs and private markets, and they're expecting to see a full open architecture range of access to investment on the platforms that they're dealing with. And that's really changing the shape of the industry, because what that means for distributors is that they need to have that full range. They need to have funds and ETFs and private markets. They need to have open architecture, which puts a tremendous infrastructure burden on the distributors. And that's where Allfunds comes in. We make that access to all of the fund managers easy, and we serve that infrastructure need, really connecting them seamlessly to those fund managers. And then, of course, when we look at the opportunity for the fund managers, it's tremendous. Suddenly, the world is open to fund managers. So global fund managers can access distributors now in so many countries. And they need to, because there's an expectation that they grow, and they're becoming more sophisticated with a wider range of products. So it's more complicated for them. And again, that's where we support them as global distribution and access to infrastructure.
And you touch on it a bit, but what do you think the future is for wealth management?
Goodness, the future for wealth management, that's a huge question. I think it's probably three things. Firstly, global. Secondly, digital. And thirdly, much more integrated. So when we look at the future of wealth management, that global democratization of access is absolutely critical. So we are seeing wealth management becoming integral in the savings plans of so many countries, particularly if you look at the European Savings Directive, incredibly important. Right here, obviously we're sitting in France, but across Europe, a big shift. But that global expectation is really important, firstly. Secondly, digital. Everybody wants access on their phones. They want more instantaneous access. And that's going right into infrastructure. So we've gone from T+3 to T+1 to exchange trading, and we're expecting that across a wider range of products. So very, very important. And then that third one, sophisticated and integrated. So when we're looking at the products that we're offering, obviously the rise of private markets, which is why we're all here, but the rise of ETFs and the changing shape of mutual funds and the wider range of mutual funds and the expectation, again, of open architecture. So that integrated, sophisticated twist is really important also for the future of wealth management, because it's coming. And remember what we're all here for. We're here to serve that end consumer, that end customer, and really look after them for what they want. And that's what they're looking for.
What are some of the challenges for distributors of adding private markets to their offerings?
So that's an answer that's really changed over time. So if I had been answering that question maybe 5 years ago, I would have said, gosh, well, the complexity of closed-end funds and contingent drawdowns and things like that. And that is still there for a significant proportion of the market. But with the rise of evergreens or semi-liquids, depending on how you want to call them, we're seeing some of that go away. However, some of the things that are still there is firstly and most importantly, education. And that is education of the distributors themselves. What are the nature of these products? It's education of the relationship managers so they know what they're selling, and an education again of the end consumer, making sure that they know what they're buying. That's the first thing. So education. The second thing is obviously infrastructure, making sure that these are products that can be sold easily and efficiently and seamlessly. And obviously, as the market gets more sophisticated and more scaled, we need to make sure that redemptions work well as well. And that's an important part of the infrastructure. So education and then infrastructure, but thirdly, also the complexity of asset allocation. You know, we've gone from this relatively simple, in retrospect, 60-40 world, and then we went to this, 55-35-10 world. But where we're going now is back to the 60-40 world, but with alternatives embedded in our understanding of equities and fixed income, and really part of that asset allocation. Now that's complicated given the semi-liquid nature of some of the securities or some of the funds that are being added, but it's a really important piece of the asset allocation for investment professionals, because when you look at the world, so much less is public than it used to be, and so much more is private. And investors deserve access to that.
And lastly, just to summarize, what are some of the key trends in terms of private market access?
Well, I think they're really simple. The first is a focus on education and making sure that everybody does understand the opportunities in private markets and, of course, the risks. And that's everywhere from distributors to relationship managers to end customers. That's really important. The second is making sure that that is available through our infrastructure and simple to use and efficient. And that's obviously where Allfunds comes in. But thirdly, making sure that it's embedded in the investment allocation, because private markets represent a tremendous opportunity for end customers to get access to something that is not otherwise available to them. And that democratization is an incredible trend as well.
Annabel Spring, CEO of Allfunds, thanks so much for the chat.
Such a pleasure. Thanks so much.